Hey guys, I wanted to talk about our repeat call activity feature. This intelligent highlighting system can be extremely powerful when used correctly, so I wanted to showcase some strategies on how to best understand this. So how does it work? Basically, if Cheddar Flow sees consecutive call orders flooding into a ticker symbol, we will highlight that symbol gold. If a put order is detected, that symbol loses its highlight and goes back to green. Let's look at a couple of strategies on how to best utilize this powerful feature. Strategy 1. Historical flow. Looking at the historical flow data is one of the best ways to spot potential directional plays. Additionally, when performing some back tests, you start identifying patterns that emerge. On Friday, May 8th, the first 30 minutes showed relentless call activity coming in. Once you see that type of action, it shouldn't be ignored. You can immediately look at the 7-day flow to make an assessment. Looking at the historical data from May 4th to May 7th, there were a couple things that can give you a high probability conviction that this name still had some upside potential. To start, the total call flow was 86%, highly bullish, especially given the amount of calls compared to puts. Secondly, each day the repeat call activity indicator went off sometime throughout the day. May 4th, May 5th, May 6th, May 7th. Next, lots of unusual order flow coming into the end of week contract, tagging the same strike prices. These ones came in on May 6th. And lastly, a large premium leap contract dated for 2022, which had a high probability that it was purchased. One other major thing to note here, make sure to look at the volume buildup throughout the day. For example, if we look at the May 15th 130 strikes from market open to almost the end of day, the volume increased a whopping 500% in 2 hours. This is a great gauge to understand when to get into a position and how long to stay inside of it. Strategy 2, technical analysis. On May 12th, our repeat call activity feature alerted us to some early action coming into square. After the initial morning alert, the action continued for about 5 hours. The alert really started triggering at 10 a.m. Let's pay attention to this. Looking at the 15-minute chart, you can notice a nice bull flag forming. Followed by the repeat call activity we spotted earlier that day, the stock made a strong breakout to the upside. Notice how 10 a.m. was when the move happened. When you can spot technical setups and combine that with order flow, your probability percentage for a successful trade can become very high. Additionally, this is the best type of conviction you can get for strong upside or downside moves. In conclusion, these two strategies can be combined or even used as general fundamentals with other ideas and strategies. Pay attention to volume buildup to gauge the overall interest of the trade. Pay attention to any repeat call activity at market open. Smart money loves coming in early to position themselves in strong upside positions. Always do your due diligence before entering a trade. Never follow anything blindly. Well, that's about it for this video tutorial. Hope you guys enjoyed it and learned something.